Hi there, hope you're doing well. This is another quick YouTube debrief for FAR. So as usual, we've created this question ourselves because we're not allowed to produce the ICAW content directly on YouTube, but it is based on real ICAW past paper content. We'll quickly go through the question, which is very short on this occasion, and the answer, point out the key things that are tested again and again, and then stay tuned to the end. We've just got some quick learning point questions just to make sure you've taken away the key points from the video. We're working to a 31st December year end for this business. So on 8th of January 2024, which was slightly after the year end, there was a fire in one of the warehouses in which they had some hemp fibre. It had a high-tech sprinkler system, so the building was okay. Unfortunately, the hemp was worthless. It had been included in inventories at the year end at a cost of 110,500. Straight into the answer. So the fire on the 8th of January is clearly an event after the reporting period because it's just over a week after the 31st of December. So that's an event that occurred between the end of the reporting period or the year end and the date when the financial statements are authorised for issue. So I guess we assume there wasn't time to issue them by the 8th of January. That would be very quick to do all of your prep stuff. So we assume, yeah, it's within that period per the answer. And then this is the standard thing. Is it adjusting or non-adjusting? So in this case, it's a non-adjusting event because it shows conditions, in other words, the fire, that arose completely after the end of the reporting period. The fire was not in progress at the year end. So it's different to a scenario where you might have a legal dispute that had started in November or something, and then they had the final decision in January or February. That's a bit different because it had already started by the year end. Obviously with a fire, that's kind of an instant one-off event. It's not something that goes on for months. So yeah, that fully started after the year end. So it's non-adjusting, but we don't stop there. Sometimes that's what students do because they think, oh, well, there's no adjustments to do, so I'll move on to the next thing. And that means you're dropping some easy marks. So that this is, for example, really easy. There's no adjustments because it's a non-adjusting event. Kind of the clue is in the name, but put that in, get the mark for it. The inventories will remain at the 110,500. Again, nice, easy mark, no calculation, but you do get some marks for applying by using the figure. So again, keep going, like we said, don't stop when you've decided it's non-adjusting. And this is an important thing. You need to think about the difference between recognition. We don't recognize or adjust anything, but sometimes we need to disclose things that aren't recognized. So disclosure versus recognition, a key difference. So if it's material, and you don't need to settle that matter because you don't have enough information. So it's a nice, open, easy thing that you can generally always say, if it's material, then we should disclose the nature of the event and an estimate of the financial effect. So once again, key learning point is keep going even if you conclude that it's a non-adjusting event. So just stay tuned. We're going to set you some quick questions just to make sure you've taken away the key learning points. So first question here, the fire took place after the year end and after the financial statements had been issued. So that's false. The financial statements had not been issued at the time of the fire. And that's what we normally see in the answer to these questions. Next question, a fire after the year end will be treated differently to a legal case which was ongoing at the year end. So have a think about that one. So that's true because the legal case is happening at the year end, whereas the fire hadn't started at all at the year end. And therefore it's not really relevant to what's happening at the year end, obviously. So the answers and the questions will obviously draw on that distinction quite often. So next question, easy marks can be dropped by stopping the answer at the time you conclude that the event is non-adjusting. So that's true. There's still several things to discuss, such as using the figures in the scenario and how those will be treated. So don't stop your answer when you conclude that it's non-adjusting. Next question, recognition and disclosure are the same. So that's false, and that's something that the examiners draw on in FAR quite a lot, and also at the advanced level, particularly the corporate reporting paper, often tests this principle. So recognition is kind of putting the numbers through into the accounts. Disclosure means we don't do that, but we have a narrative statement about what's happening to help the user. Next thing, if you cannot settle whether the issue is material because of a lack of information, you should not say anything about materiality in your answer. So that's false. As we saw, you can continue your answer using an if something is material, then this is what would happen approach. And that allows you to show more knowledge. So this tip is a bit like where we said don't stop when it says it's not, when you say it's non-adjusting, there's still other things that you can talk about. So same idea here. Okay, so hopefully you're not too sad, but that's it for this video. Thanks for watching, and hopefully you now feel more confident with this topic area.